Stocks see a sharp sell-off across the board as concerns over valuations kicks in. Auto as well as metals are the biggest losers today. Indices marginally recover from the day's lows.
SUV major M&M skids after it cuts prices of its XUV 700. Tata Motors too trims tabs for Safari and Harrier, even as Maruti and others offer discounts. Analysts see this as a sign of slowing demand and increased competition.
Mahanagar Gas MD Anshu Singhal tells CNBC-TV18 he is heard of a likely cut in excise duty on gas, even as the industry bats for bringing gas under GST. He points to a sharp reduction in Indian gas allocation as a pressure point.
And Emcure Pharma lists at a hefty premium of over 30% to its offer price of 1,008 rupees a share, while Bansal Wire lists at a near 38% premium to its offer price of 256 rupees a share. Both offers very heavily oversubscribed.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Sonia Shenoy. So Sonia, quite a bit of consolidation in the market today. And yes, there is a sense that there should be some valuation, at least the bloated valuation needs correction. So that's what is seen clearly in the market. At the moment, Nifty 50 has recovered from the lowest point of the trading session. There is a slight recovery seen, but still 0.6% down in trade. When we talk about Sensex, about 540 points lost in trade at the moment, and Bank Nifty is taking a deeper cut, is leading the charge when it comes to a downward movement, and 0.8% down on that. Mid caps too in line with the key indices, 0.7% down. So it's no surprise that the market breadth and the strength of the market is on the weakish side today, with advanced decline ratio heavily in favor of the declining stocks. On my screen on top is M&M, also because of news, and metal counters, which are the high beta counters, are the ones which are dragging the most. And on the flip side, some of the consumption names like Britannia as well as insurance companies, life insurance companies, are the ones which are on a contra call and still gaining. Sonia.
Absolutely. So today is one of those days, right, Nisha, where you have a little bit of money being taken off the table, which is not such a bad thing, I would assume, given that we've had such a strong rally under our belt. Mutual fund, investments have been at a record high, SIPs as well. So all of this is, I guess, par for the course. At some point, a correction or a pullback has to kick in. And that's pretty much what's happening right now. So let's get straight to individual stocks then. MGL is buzzing in trade after it hiked CNG prices by 1.5 rupees a kilo and 1 rupee per SCM for PNG on the back of a shortfall in domestic gas allocation. Earlier, we spoke to Ashu Shingal, who is the managing director at MGL, to get an outlook on volumes and expectations from the budget going ahead. Listen in.
We were getting APM gas, which is at $6.50. From 82%, it has come down to 68%. So there is substantial reduction in the APM gas, which is the domestically available cheap gas. And the LNG prices were earlier down, but now it has started increasing again. So we are constrained to increase 1.5 rupees in the CNG prices. However, still we are the cheapest in the country in terms of CNG prices and PNG prices. The per bike consumption, the cylinder capacity is only 2 kg. So to see any significant increase in our volumes, the number of bikes should be very huge. So it will take some time. Maybe next year we will get some volume, maybe 2-3%, and afterwards it can increase furthermore. But definitely it will take some time to, one, that people are getting used to the new bike, although it is definitely much more advantageous in terms of running cost. So double the numbers will give us maybe 10% volume, but then the numbers of bikes should be around 7-8 lakhs, which will take a substantial period to come to that number in Mumbai or in our geographical areas. The budget is passed and what is included in the budget or not. The other point which we are hearing is maybe the gas can be included in GST, because if that so happens, then excise duty cut will not be required. It will be one tax regime for the gas segment itself.
All right, so that was a word coming in from Mahanagar Gas. Let's steer across to the auto sector, which is in news today. And the two stocks in focus are Tata Motors as well as Mahindra & Mahindra. Remember, M&M is the top Nifty loser in the trading session today with huge cuts. Now, the leading SUV makers like Mahindra Group as well as Tata Motors have slashed prices. And Parikshit Luthra is right here to give us some details on why the price cut, its impact and the demand-supply scenario in this competitive market. Tell us, Parikshit.
Well, for the last few weeks, the Federation of Automobile Dealers has been highlighting that there is a very high level of inventory in the system. In the dealer network, that is, almost 62 to 67 days of inventory, which is high by any standards. There are 6.5 lakh unsold cars in the system with a total cost of about 60,000 crore rupees. So that's a lot for the moment. Some of the reasons being attributed to low demands is one, the last few months we were seeing elections in India. There was a very high heat wave because of which customers were not turning up at showrooms. Now you've got rains, you've got the sowing season, you've got Shraddh or an inauspicious period in different parts of the country because of which people don't go ahead and buy any vehicles or new product. So Q2 is expected to be slow. The companies are putting up stiff targets. There is a high inventory in the system. You need to exhaust that. At the same time, the competition in the auto space is increasing, and that's why we are seeing this price reduction by Mahindra Group and also by the Tata Motors. These are two leading competitors in the SUV space. So if Tata Motors has reduced the prices of the Harrier and Safari by 50 to 70,000 and 1,40,000 in benefits, the Mahindra Group has reduced the price of the top model of the XUV700, their flagship SUV, by about 2 lakh rupees. Now, this is a big price reduction. The companies are saying that this is for a limited time period and it's only to make it more accessible to consumers. But questions will definitely be asked about whether there is weakened demand in the market. And analysts are saying that one of the reasons for these steep cuts is because of the low demand in the system going ahead. Now, whether things improve towards the end of Q2 going into the festive season, that remains to be seen. But we are seeing heavy discounting across the board, across all companies, including Maruti Suzuki. There is also that bit of added pressure that the street is looking at, and that is in terms of the exemption on road tax on hybrid vehicles in the state of Uttar Pradesh, which is a big automobile market. 2.6 lakh cars are sold there every month, and that is also a concern for certain car makers, even though on record they say that it's only one market, it's not a nationwide picture. So lots changing in the automobile market in the country. We expect the discounts to go up even higher, according to some dealers, and clearly there is a question about muted demand in the market going forward.
Okay, Parikshit, thanks a lot for that. Well, the union budget is just a few days away. My colleague spoke to the NRAI president, the promoters of Wow Momos and of Chayos, to understand their expectations from the upcoming budget. Listen in.
For us, a one-window policy, which basically allows us to operate and open restaurants faster. A one-window policy which basically makes things similar in each state. And the availability of licensing done in a manner which allows our openings of restaurants and existing restaurants, renewals, to be done in a manner which is seamless. That's point one. In regard to GST, we are one of the industries that do not get input on our expenses. We've been trying to discuss this with the government, with the finance ministry, with the various different state ministers in respect to the various states and the GST council. We're hopeful, we're engaging. We want a dual policy where we can have a 5% and a 12% with input, which basically allows us to offset the expenses that we are incurring today and also allows us to spend more money on capex, which allows us to open more restaurants, hence more employment and more revenue for the government.
We want one nation, one regulation. Across states, compliances regulations are very, very large. LG met them yesterday and he's trying to simplify this. So hope that's a welcome move. But yeah, regulations, compliances are very, very high in this industry and we really need to avoid duplication of work. Ask from the government definitely is for GST input. Like I said, we don't get GST input. So there's duplication of taxes. We pay GST on rentals. Then whatever 5% GST we take from the customer, we pay that also to the government. We don't get the input credit, which is a must for this industry because there are so many restaurateurs who are not able to meet ends, are still running in losses, and getting GST input would make them profitable overnight. At the same time, the benefit would be passed on to the consumer because see, if you are able to control inflationary measures without taking up pricing and get some kind of a positive margin by GST input, the benefit goes on to the consumer.
Our biggest demand is please give food services industry industry status because it's worthy of it given the size. Set up a separate ministry for food services industry because our challenges are extremely unique as compared to any other industry, and therefore it's all the more essential for our challenges to be dealt with effectiveness. Allow input tax credit for food services industry because it is unnecessarily leading to double taxation for many years, and there is absolutely no pro-consumer argument for not having input tax credit. There are only pro-consumer arguments with input tax credit, not in the lack of it. And lastly, it is in the best interest of the of food services industry for it to be enabled to run 24 hours a day and just open it up from licensing point of view.
All right. So food services industry, Sonia is asking for an industry status. And recently they have actually commanded a lot of importance, especially now with market having Zomato as a listed entity, Swiggy probably on its way for an IPO. Yes. And NRAI is also a very critical mass now and commands a lot of value. So that's an interesting one. But wish list really coming in thick and fast as we get closer to the union budget. With that, we'll slip into a short breather on the show. But Fed chairman gives his testimony to the Congress, and we get you the key highlights after this very short break. Stay tuned.
Welcome back. You're watching Business Lunch on CNBC-TV18. Well, as we count down to the budget, the Road Ministry is expected to get a higher allocation versus the interim budget and versus last year's budget. Danish has all the details. Danish, over to you.
Well, Modi Government 3.0 is all set to present its first budget on 23rd July. In the upcoming budget, the government is likely to increase its focus on the road, transport and highway sector. Sources told CNBC-TV18 that the overall budget allocation for the Ministry of Road, Transport and Highways is likely to be around ₹3 lakh crore, which is much higher than the interim and previous budgets. There will be more focus on rapid transformation of the road and highways network across the country. The government is likely to set a target of 3,000 kilometers for new highway construction, and there could be enhanced focus on increasing digitization in the sector. Ministry's digitization targets will likely include announcement and full plan on GPS-based tolling and usage of AI for finding flaws in current roads and highways. There will be enhanced focus on use of future technologies. The government is expected to make announcement on future energy-compatible highways, that is, highways for EVs, LNG, etc. Sources told CNBC-TV18 that there could be announcements on specific capex for further developing the charging infrastructure and EV battery recycling facilities. The announcement will be made keeping in mind Vision 2047, as by 2047, government aims to build a highway network of 50,000 kilometers.
All right, Danish, thanks so much for getting us all those details. Let's shift focus to the U.S. Federal Reserve and speaking to the Senate Banking Committee as part of his semi-annual address to the Congress. Well, the Federal Reserve Chair, Jerome Powell, cautioned that keeping the rates elevated for too long could stunt the economic growth. Listen in.
The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Fed's 2% inflation goal and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. And more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy.
Okay, and let's now move on and listen in to Ruchir Sharma, the chairman of the Rockefeller International, talking about the US economy and also his views on investing in emerging markets, including India. Take a look.
I think that the US economy is slowing. This is going to be the second quarter in a row where growth comes in well below 2%. And I think that this trend is now seeming that it's going to go on. I won't be surprised if the US economy comes to a virtual standstill in the next 6 months or so as the stimulus, which has, I think, kept growth artificially high, dries up. And I suspect that's what's going on just now. Investors currently are in the grip of the AI mania. So as long as that goes on, everything else gets shaded. So it's very interesting comparison that the US is outperforming, but it's almost all due to the mega cap tech stocks, particularly stocks like NVIDIA, but on an equal weighted basis. If you look at the US market or the European markets or emerging markets, the performance is pretty close. So I think that is just that one sector that's keeping the US outperformance going at this stage. Yeah, I think that India is a completely unique case on its own. As you know, it's the most expensive market in the world today. It's the one country, I would say, which is having a true bull market, even compared to the US, as you point out, that the breadth of the Indian bull market is what you typically see in bull markets, that everything is rising there with mid to small caps doing better than even the large caps. But I will not say that geopolitics is a major risk for investing in emerging markets as such. I think that emerging markets at this stage outside of India, which is obviously very expensive, are extremely cheap. But this is a central issue which we are dealing with in the US, and I think we're dealing with global investing.
All right. So India, the most expensive market. That's what Ruchir Sharma says. And there you go. We had some consolidation in profit booking today. But as we slip into a short breather today, a quick programming note. Will the RBI cut rates this year? That's a big question. Is RBI worried about a bubble in the stock market? Is India poised for a GDP upgrade? Coming up tomorrow, a CNBC-TV18 mega exclusive. The definitive RBI governor interview only on India's most watched business news channel. So stay tuned, don't miss it. Welcome back. You are watching Business Lunch, and in an important news now coming in from the world of sports, well, the BCCI Secretary Jay Shah announced the appointment of Gautam Gambhir as the Indian cricket team's head coach last evening. Now, the announcement came via a tweet from BCCI Secretary Jay Shah's X handle. Reacting to his appointment, Gautam Gambhir, via a post on X, said, "India is my identity and serving my country has been the greatest privilege of my life. I'm honored to be back, albeit wearing a different hat." And Gambhir is expected to assume duties for India's tour of Sri Lanka that gets underway later this month. So it's a big news, Sonia, and it was expected as well. And being a cricket fan, I could say that, the way Gautam Gambhir really created the KKR team in the last IPL season. What a stunning team where everybody actually took part in performance in their own way. That was just stunning. So he was a glue for that whole team creation. And that's what is likely to now happen at a national level also. So after Rahul Dravid, it's big shoes to really fill for Gautam Gambhir. But he has shown his mettle quite clearly.
Okay, big shoes to fill and all the best to him, right? Taking over Team India is not a joke. Yes, absolutely big job for him. But less than 3 weeks to go for the Paris Olympics, the Indian contingent would be looking to better its medal tally of 7 from the Tokyo Olympics, which was its biggest haul in a single edition. All eyes would, however, be on javelin superstar Neeraj Chopra as he hopes to become the first Indian to win 2 Olympic gold medals. Matthew Thomas gets us more on the rise of this superstar.
India's best athletes have their sights set on gold as they head to Paris. And one of these stars who has already had his taste of Olympic gold is javelin throw ace Neeraj Chopra. And there's no doubt that he's looking for more in these games. India's first Olympic gold medalist in track and field, he's the man with a rocket for a right arm, and he's won every major honor a javelin thrower possibly can, beginning with his historic gold in the Tokyo Olympics 2021. His place in the Indian Olympic squad was sealed with an 88.7-meter throw in August 2023 at the World Athletic Championships. That's higher than his gold medal-winning throw in Japan. Consistent excellence was the 26-year-old's modus operandi before his historic feat, and that has only amplified since the spotlight was thrust on him. In the last 3 years, he has won a series of first and second place finishes, including a second gold at the Asian Games in 2023. As he heads to Paris, Chopra is looking to add to this medal tally and book another slot in the history books as India's first 2-time Olympic gold medalist outside a team sport.
All right, important news flashing on our screens, and Asian Paints is perking up in trade, a sharp rise there. As Asian Paints increases the prices, next show can take forward all the details. But remember, in paints business also, the competition is intensified with Birlas coming in with Opus. With that, it's a wrap on Business Lunch. Thanks so much.